Hey, Anton, yeah, I can hear you.
Of course.
Thank you so much for having me. I'm Rumbi Makanga, Zimbabwean-born, based out here in Essex. My background, I actually started my career working as an operator in deep tech startups across Europe and the US, and then I got into venture capital about 5-6 years ago. Still very heavily deep tech leaning. I started off at a VC firm called Episode One, which do deep tech and marketplace investments. Most recently, I was at Seraphim Space, which is the world's leading space tech investor. And I think within this introductory part, I think just to highlight that my experience as an investor, I also angel invest, is actually very, startup heavy, tech heavy, and deep tech leaning. So just want to put a caveat that a lot of my advice, I'll try to make it as general as possible, but that's just my background for the audience's benefit. But yeah, thanks so much for having me here, Anton.
And I'm sorry, I was dropping my LinkedIn in. Thank you for having me. Good to be back. My name is Guy Pengelly. My background is accounting and finance. So I qualified as a chartered accountant with Deloitte and then went into investment banking for a couple of years and then joined a boutique fund manager where I managed a UK VC called the British Innovation Fund, investing into UK university spin-outs. So focused on ag tech and healthcare opportunities. As of almost a year ago, I have teamed up with some of my colleagues and we have created a company called Varesco, where we are purely focused on food and agricultural opportunities, both on the investment side and on the advisory side. So we advise companies all the way from startup to NASDAQ listed businesses with food and ag related opportunities, and are also building out a farmland fund, which is slightly different to VC, of course. But yeah, it's interesting. I'm now approaching things with a sort of VC mindset from my previous career and also a startup mindset as having created Varesco and pretty much being put in charge of the operational side of things. So I know the pain that founders will go through with starting up companies. So yeah, looking forward to hearing the questions and seeing where I can help out. Thanks, Anton. So I'd say do make sure that you, so obviously it sounds obvious, but are well prepared for your fundraising, and make sure that you've got your documents prepped, your business plan, financial model, all in the data room, your kind of review of the market and your pitch deck, just to make sure that when you go out into fundraising, if you get interested investors, you're able to share material with them immediately to make sure that you keep the conversation moving forward. The other thing I'd say is do your research on the investors that you're looking to approach, whether that's angel investors or institutional investors, and therefore you can tailor your outreach to them to kind of, there's nothing worse than getting what's clearly a generic sort of email, as it were, which doesn't really kind of dig into what you're doing as an investor and why the company might be a fit for your investment strategy. Whereas obviously if you've tailored that, that always looks good from an investment point of view. And then on don'ts, I think don't get disheartened with fundraising. It's a difficult fundraising environment out there, has been for a while now. I keep coming on, Anton, and saying things will get better, and they will at some point. I'm not going to tell you when because I don't know, but it feels like every time we think things are moving forward, something happens. I guess the last time since I've been on, we've had that whole tariff. Let's call it a hiccup and move on quickly. But it's the environment is tough out there, but it will get easier at some point. And if you have a good idea, a good kind of business plan, and you believe in what you are doing and you think you can be disruptive within the venture space or within your specific sector and investors will like it, then you just need to keep plugging away and finding those investors out there who will like it. Sometimes it just turns into a numbers game, so just keep at it, keep having conversations, keep following up more warm leads. Yeah, that would be it from me.
I'll just jump in there. And just to say, I'm on browser, so I actually can't see a chat function to drop my LinkedIn. So sorry about that. Mine will be a series of do's. I think I'm a bit optimistic leaning. But I think one thing that I would really counsel everyone to do is to start off by thinking about what kind of company you are building. I think there's something that Anton said at the beginning, right, around, there are startups, just that there are different kinds of companies. And even within startups, there's actually different classes of startup in terms of what the growth expectations will look like and what different kinds of VCs will want from that, or different kind of investors will want from that. And so I think one of the biggest things I always tell companies at the very beginning is to think about what kind of company that you're building. If you're building a super high growth, exponential growth startup, your trajectory and the investors that you speak to are going to be very different if you're building still a high growth company, but just with that super, I guess what they call like blitzscaling, but without that 30% month on month growth, which is actually really, really hard to sustain. That's one thing I would say. There's a resource that I used to share with companies a very long time ago. It's called the Village Capital Viral Pathway Framework. And what it essentially shows is at different stages of company growth, what kind of investors you speak to, when you can start to sort of speak to angel investors, when you start speaking to institutional investors. And I think it's always very useful from a company perspective to actually understand where you are in the journey. Because I think sometimes when companies are super early and they're not getting a lot of positive feedback from investors, there's this feeling of like, oh my gosh, like no one gets what we're doing. But sometimes it's actually not that. It's just, where you're at in the journey and when they can come in and start to invest, especially for institutional investors. They have quite specific mandates. So understanding where you sit versus where they invest, I think is a really important thing for founders to understand. I think there've been some really great programs. I'm forgetting the one that I feel like it was Techstars, somebody, there was a program that used to be very focused on, equipping founders with just understanding the VC journey, like VC 101, because it's also very useful to understand how VCs think, which goes into my next point is like, do actually, as much as you can, figure out ways to deconstruct VC decision making. What makes them say yes? What are their motivations? What are their drivers? Because I think understanding that helps you understand how better to actually position yourself as a startup to the kinds of investors that you want to talk to. I think really now reiterating some points that Guy made, I think definitely do be targeted in how you approach investors. Do not spray and pray. It's very obvious from an investor standpoint when somebody is just sending out emails to like a huge list. I think especially nowadays when you can buy some lists or find some lists online and you're just sending emails to every single person on that list, I very, very strongly suggest you don't do that, just because it can really damage your relationship with investors that could actually be a good fit. But when you're just sending out very untargeted outreach, it doesn't look great. The advice I always give to companies is actually to treat your fundraising like B2B sales, in the sense that you do your fundamental thinking and strategizing right around. You figured out what kind of company you are, you figured out how you're positioned in terms of the fundraising journey, and then you start to think about what kind of investors are a really good fit for what you're building. And then you sort of narrowed that down into, okay, this is the list of people that I'm going to reach out to. Now, I come from a background of having done a lot of B2B sales, and one of the things I used to do strategically is if you have like a list of 100, is not to start, and let's say the top ones are like the primes in the industry, I would never start my outreach at the top. You'd actually start maybe closer to the bottom, because it means you get practice at speaking to investors. So investors that are relevant, but maybe, I don't know, smaller, or for whatever reason, just not your like top 10, top 20 target investors, because it gives you the opportunity to practice your pitching. It gives you the opportunity to like refine that in a much safer, much less, like you can fail. more safely in that kind of context. So that's one of the things I always advise people to do, is to think of it like B2B sales and actually treat it in that way, which comes to another point the guy made about not getting disheartened. There is an element of this, which is that it's a numbers game, just like sales, right? Like you're gonna have to go out there and speak to a lot of people, and not to get disheartened. And I think, again, like just from a mindset perspective, if you treat some of the early part of that journey is actually a learning process for you as founders and a refinement process. I've seen founders do that really, really positively, where they really jump into it with like gusto, and they really treat those early conversations as an opportunity to like really understand and learn what investors are thinking, you know, how they're thinking and that kind of thing. And then they can use that when they do go and speak to the investors, you know, that maybe will write larger checks or are, for whatever reason, more suited to what they're building. And the final do for me is to deeply understand your fundamentals. And this is, I think we speak so much about fundraising because fundraising is important, obviously, and you need funds to help to accelerate your growth. But I think the foundational thing is actually to understand, you know, your economic fundamentals in your business. You know, how do you make money? What's your business model? What do you need to do to get from, you know, one place to the next? Because that's something that investors want to know, that you understand very deeply. But I also think that it helps you to really anchor your approach to building your business on the actual fundamentals. Like you're building a business, not like building a machine that fundraises really well. If I hope that makes sense what I'm trying to say here. So yeah, I would always really drive people to make sure they really, really deeply have thought through, from a business perspective, from an economic, financial perspective, what you're building, how it makes money, how it grows, how quickly it grows, et cetera, et cetera. I'll pause there. I think I've said a lot.
No, that is good enough. Thank you very much for that, Rumbi. Right, Ian, quick reminder and a reset of the conversation. I can see a few of you on the live streams. So this is Startup Fundraising Q&A. It's our 138th session. We're here to help you with whatever questions you may have on your fundraising journey, whether you want to know when's the right time to start looking for investment, or perhaps how much you should ask for, or what are valuations, and maybe how do you prepare for a pitch, for a due diligence, or how do you get your data room together, and all that jazz. There literally are no wrong questions, and there's no need to be shy. It's a learning curve for us all. Now, if you are, however, on the live streams, whether it's LinkedIn, YouTube, Facebook, or Instagram, unfortunately, we are unable to monitor your questions there live. So you'll need to join us here on Microsoft Teams. It's audio only, and it's very easy to get on it. All you have to do is either click on the links on those live streams, or simply go to our website, startuptoscaleup.club. You find today's session, which is Startup Fundraising Q&A 138. You click join on that. It's a quick registration. That then gets you here onto our call. You'll get a link where you can join us here on Microsoft Teams. You drop in your question there, and then I'll give you the mic so you can ask the team. If your questions, by the way, today are not on fundraising, save them for the other events. Monday's talent, Tuesday's product and tech, Wednesday's growth, Thursday's fundraising, second Friday of the month it's UK Startup Law, and third Friday of the month it's UK Startup Finances. They're all from 12 to 1 p.m. UK time, and you can RSVP to any of them via our site, startuptoscaleup.club. And actually, when you're there, you might want to join our WhatsApp community of founders, investors, and operators. We've got a few groups there, and on the site you'll see a WhatsApp icon at the top and bottom of the site. Now, we've got a few questions that were sent in. I've dropped two in the chat. I'll read them out loud for those of you on the live streams, and Guy can read them. I'm not sure what browser you're using, Rumbi, but some browsers do allow the chat feature, so you might want to play around with it if you can, but not to worry, I'll read it out loud anyway. So this is from a deep tech founder based in Cambridge, seed stage physicist. We've developed a new material that improves battery performance. The challenge is that materials science innovations often take years to commercialize. How do I present a credible timeline for getting our product to market? And how can I attract investors who are willing to take a long-term view on deep tech? Okay, so I guess we can start. Yeah, let's start with Guy one more time, and then we go on to Ruby. It would be nice if you were here so we could ask you a few follow-ups, because based on that question, I think we have more questions for now than answers. But let's try and work with what we've got. What would you do here, Guy, if you were her, if you were this founder?
So I'm going to take a few assumptions as to what I can't work out if this is a spin out or not. I'm assuming it's probably some research related spin out. So
I've looked at her profile, and she is in academia. So it doesn't even say, she hasn't got this startup listed. So she is in academia, and I'm assuming this is either a side project or maybe something still working on in her program there, basically, if that makes sense.
So that's fine. So the good news is, I mean, you couldn't have really chosen a better location in the UK in terms to have this kind of project. So I would get onto the University Tech Transfer Office sooner rather than later and have them kind of help you build your project from here into an investable spin out. I mean, that's their job. And there's of the UK universities, Oxford, Cambridge, and the London universities are the best at doing this and have a very long track record of doing so. What I think will be important is, obviously you'll be approaching things from a research side of view, but you will need that commercialization expertise, and therefore they will be able to help bring in advisors who can essentially help you plan out that journey to commercialization and what that looks like. What you'll need to present to investors is, a credible plan for getting from the research stage to commercialization. So, how long it will take to get a prototype up and running, any regulatory requirements that are required, obviously the capital required at each stage that you're going through, initial kind of trials, and then kind of the first customers, as it were, that you will be commercializing with, and how that all looks like. So just needs to have those milestones kind of researched, mapped out, and timelined put to them, as well as kind of expected costs to get there. And then I think, as I said, if you can get an external advisor from the tech transfer office or just in the industry, that'd be very helpful towards doing that. And in terms of investment ecosystem, the Cambridge ecosystem is phenomenally strong, both institutionally and with angels. So it may be worth speaking with angel groups now as well, because what often happens is, especially within this kind of sector, there will be angels within those, there'll be individuals within those angel groups who have expertise within this industry and will want to help strategically, as well as potentially put money into a company such as yours. So I think, get some external advice, start with university, look at angel groups as well. And sounds really interesting.
Thank you very much, Guy. Ruby?
Yeah, I think Guy's made some really, really excellent points there. I think especially around the location within Cambridge, both for being able to tap into different universities. So beyond, I think the tech transfer office is a great idea, but I also, I'm a Cambridge alum, and I know that Cambridge has a lot of different university offerings for helping founders to commercialize their innovations. I think tapping into as much of that as you can, particularly because it helps you, especially if you're making that transition from academia to entrepreneur, it helps you kind of bridge that gap and helps you kind of start to speak the language that a lot of investors will want. I second the point around tapping into angel groups. There's actually a new group, an Oxbridge entrepreneur community launching. I just managed to drop my LinkedIn there. Happy to share that with you. Essentially, community for entrepreneurs, investors from Oxbridge. So tapping into anything like that. or the Cambridge Angel Groups is useful for, I think, just getting the advice at the early stage. Because a lot of those entrepreneurs are actually deep tech entrepreneurs who have achieved success, so they'll be able to sort of help you, again, bridge that gap between going from this novel material to the actual commercialization, and helping you to kind of bridge that gap with investors as well. The other thing that I would say is I think there are some really, really great deep tech investors across the UK who understand that actually there is this, there's a pathway to commercialization, there's this journey that you have to take. And so I think for you, more than perhaps other startups, actually being really targeted about the investors that you approach is really, really great. The other thing is that Innovate, is it Innovate UK? No, it's not Innovate UK. It's KTN. I can always find it. But there's basically an initiative that specifically is targeted at driving. I think it's driving more funding into deep tech startups. And there's a grant actually that investors, so a match grant for innovations. I think it's general deep tech, like generalist deep tech. So I think this might come under it. I think it's a really great way as well to kind of, it provides an additional incentive for investors to invest. I forgot what the amounts were, but let's say, you know, you got a 750k check from an investor, you get a 750k match grant to help you to develop your technology. And I think that's just another general point with deep tech, is I think you can also tap into different, I think the next question actually is asking about, you know, Innovate UK or, you know, non-equity funding or equity-free funding. I think also very useful from your perspective to look into any sources of capital that you can get that can help you to do part of that development, that tech development, without giving away equity. That's great for you as a founder to retain as much equity as you can, and it's also great for your future investors because at the point at which they invest, you've been able to really reduce some of that risk without it costing them. I think that's the biggest thing for investors, right, is how much of that risk do they want to underwrite. So if you can find other sources of funding that can help you underwrite some of that risk earlier on, that's really great. And another thing, actually, so I final point on this is having worked within deep tech startups, another great strategy can sometimes be if you can build alliances with your future customers really early and actually get them to, again, underwrite some of that development cost and some of that development risk. Strategically, it can be a bit challenging, right? Because they'll want all kinds of things from you. So it's managing to do that without, you know, giving them exclusivity or, you know, having to sign on to any terms that will become, you know, complicated for you later on. But just different things to think about in terms of really, when you then speak to investors, you know, presenting a really, really attractive proposition.
Thank you very much for that, Rumbi, as well. Right here, quick reminder to those of you on the live streams, please remember that we are unable to monitor your questions there live. So if you do have any fundraising questions for our own investors on the panel, join us here on Microsoft Teams. Simply click on the links on those live streams, whether it's LinkedIn, YouTube, Facebook, or Instagram. And then click on join. It's a quick registration that gets you a link to your email, and then through that link you can come here on Microsoft Teams. By the way, it's audio only, so easy to join from anywhere. Now, rather than go to some of the questions that were sent in that I've posted in the chat, I think we'll give the mic to Simona. Let me make you speaker, so allow mic, and let me see. Are you able to talk, Simona? Are you audible? Do you want to try?
Hello. Hi, can you hear me?
Yes, we can. That's brilliant.
Hi.
So please introduce yourself and then fire away with your question, please.
Thank you. Yes, hi everybody. My name is Simona. I am the founder and director of a small company called Property Workers Ltd. It's a fairly new company. I've just launched, meaning I finished, you know, my website is on online, and I'm active. At the moment, I'm at the onboarding stage, meaning, so Property Worker is a marketplace only for the property sector. So solicitors, photographer, estate agents, plumbers, cleaners, they want to advertise their services. They would just create a listing, and then landlord and developer or estate agents can contact them directly in exchange of a small fee. Also, estate agents can advertise the properties. Property recruitment consultants can advertise job, but also individual landlord, if they wish, they can advertise one company. There's a fee for that, a separate fee. Or a company that is looking for one employee can also do that. Now, my question...
All things property, basically. A marketplace for everything related to the property market, right?
Exactly, yeah. In the UK at the moment, solely for the UK, and then hopefully in the future we can expand worldwide, but at the moment it's all in the UK. Now, I've been looking for some funding. Now, my expenses are not very, very high. I built a website myself. I have a background in finance, so accounting is also covered on that side. I got very small. At the moment, I'm working from home. I don't have any. I use contractors even if I need some extra service. So my expenses are very low. But I need some cash flow, some funding for marketing.
Yeah.
Sorry?
Okay. No, I'm just getting to the next point. You want to raise investment. Why
for
do
marketing?
You need
Yeah.
Okay, so you want it for marketing. Okay.
Yeah, mainly.
Do you have a background in property markets, Simona?
I do not, but I am doing a course.
Okay. So why do you want to open this company? Why have you opened this company?
Because I always had an interest in property, and I did a lot of studying, reading. I read a lot of magazine. I think I got quite a high knowledge. So because the market on finance is a bit it's not very great at the moment, and also because I'm a mom, so I want to work from home. So I pretty much try to cover everything that,
I hear. Can I ask you, Simona?
Yes.
In this startup that you have,
Mm-hmm.
two quick questions, if I may. Number one, who are two companies that are competitors and you would like to become as successful as them or do as well as they do in your field? Do you know them?
I know, yes, there is although I think I can do better. I think.
Good start.
There's a company called Check a Trade.
Okay. And the other one?
Oh gosh, sorry, it doesn't. Find Me a Builder, I think it's called. So I can't remember the exact name at the moment, but
I hear. Okay.
Now the difference between me and Find Me a Builder, obviously they do almost the same thing, but they don't do solicitors, photographer, marketer, things like that.
And the second question is, what makes you think that you can do? What is one thing that you are sure that you are going to do better than all these others that do similar stuff?
Okay, well, better than my builder, I'm gonna do. I'm gonna vetting all the service providers on my website. Check Trade does that as well. Better than Check Trade. I mean, I think that I don't like they do, and I don't want to do is work on a credit system. So what I found. People get really annoyed when they're looking for a plumber, for example, and then they just enter all the details, and then they just get thousands of phone calls and emails from angry builders and plumbers, and then they get really angry if you say, no, that's not what I wanted. I wanted to find someone myself, and then decide who to contact. So that's a thing. I think that I spoke with several people, and they told me annoys them as well. So I want to fix that.
Fair enough. Okay, That's a good start. Now, I'll give you my quick 2 pence and then pass you on to my investors.
Sure.
Number one, with the situation at the moment, Simona, especially for this kind of SaaS business, software as a service that you have, albeit a great idea, unless you can show some traction, I don't think you'll be able to raise. But showing traction shouldn't be too difficult. That's something to bear in mind. Secondly, my advice would be to look at a VC called Pi Labs. We used to have one of their partners that used to join us on these calls. I don't know if you remember, Guy. And there's a few companies that they have invested and are in their portfolio now or have exited that actually do things even more aligned to what you're trying to do than check a trade or find me a builder.
Okay.
So perhaps the exact same thing. They have, I've come across at least 2 companies that have built a marketplace. So personally, I would focus on finding some users, finding some people that are going to start paying you some money, and then I would focus on angels.
Okay.
Because VCs and anything what they call institutional, it's just too early for you. But maybe you can focus on angels. Ideally, maybe angels that have been in the industry, but you definitely want to show some traction. But now, maybe we'll try our investors here. I'm sure they can come up with some good tips. Let's start with Rumbi, and then Guy. Let's try and keep it about a minute or so, please, Rumbi and Guy, so that we can ask, maybe answer some other questions or something like that. Go ahead.
Yeah, sure. Mine can be really short. I think what I understood from what you said, Simona, is that, you know, right now your costs aren't super high and you just want the money to do some marketing and get the word out. And I think just focusing on a very specific thing that Anton just said there, because I think if you're starting out and what you're trying to do is just to get your first customers, you can actually probably do that just by being really creative. It might mean that you have to maybe go out there and, like, you know, sign on solicitors one by one, that kind of thing, and maybe find different ways to advertise without spending too much money. But I absolutely think that, yeah, especially in this fundraising environment, raising a lot of money without a lot of, you know, traction, without a lot of proof points for, you know, these are the customers, these are the kinds of sales that are happening, might be a bit tricky. And I think one way that you might be able to make this a bit simpler for yourself, I understand the full vision is like this sort of marketplace for the property sector. I'm guessing it's sort of matchmaking between, you know, different kinds of service providers and, you know, people that are, you know, doing different kinds of things to do with property. What you might be able to do for yourself is actually to streamline that. If you think of a really, really specific, really, really high problem. You mentioned some, you know, other platforms that you've seen, some things they're doing wrong. So if you can find one thing that you can do and do it really, really well, that makes it easier for you as you're starting out to actually send a very clear message out to both to the service providers that you want to sign on and to your potential customers. And that can actually make it easier and cheaper for you from the marketing perspective. It also means that you're able to start generating revenue a bit earlier, which then allows you to be able to go on and do some other things and grow the scale and the scope of what you're trying to build.
I absolutely agree with the going really niche to start with, Simona. Find one thing that you really are sure that can do better than the others. Start with that, and then either add on to it if that goes well, or if it doesn't, get rid of it and start something else. So very good point from Rumbi there. Guy?
Very good, thank you.
I think that was really helpful. I think going through that kind of proof of concept and being able to iron out any initial bugs or sort of pinch points within the platform at an early stage is good, and therefore trying to bootstrap for as long as possible makes sense. The other reason why it makes sense to bootstrap for as long as possible is because you never give away as much equity as you do in the initial early stage round. So if you can keep yourself going, and the fact you have low overheads is a massive help for as long as possible, and kind of start generating as much revenue as possible with just yourself before you go out and you say to investors, look, this is what I've achieved on my own. I've got very kind of high overheads, but actually I need this specific amount of funding to go out marketing because I've proved my concept and now I want to scale my business. That's a lot more powerful than just sort of going out. So I want to do a little bit of marketing now and see where I get to, because that will cost you in terms of equity if you can actually raise, because it'd be difficult to raise anyway at this point. So yeah, try and get that a little bit more momentum, I would have thought.
Thanks.
Absolutely. And Simona, if you can find a co-founder that has been in the property world, that would be an immense help. And having myself been involved in the property world and even had a couple of those businesses, one thing I've learned is that the king in here, it's the vendors, i.e. the people that want to sell or rent out a property. So focus on clients that want these people. Therefore, maybe go out there and speak to people who've got a ton of properties and they either want to sell them or rent them out, and then go and find those that want to service them. I'm sorry, Rumbi, I see you're unmuted. Did you want to add anything?
Sorry, that was a mistake, sorry.
No worries. I hope you found that helpful, Simona. Do you have any follow-ups, any other questions for us?
No, it's thank you so much for the advice. I'll definitely do that. I'll focus on push the fact that I've heard of the members, but maybe I should try to mention on social media and my website that, what I'm gonna do the other competitors don't do. So yeah, it's been very, very helpful. Thank you so much.
No worries. And Simona, if you like, do join us on Wednesday, where we have a room on growth. Basically, it's all about sales and marketing and how to get clients and users and all that jazz. And I'm sure the team there, we've got a brilliant team next Wednesday, and they'd be more than happy to try and help in terms of how you actually get those initial customers.
I will.
Brilliant. And feel free to join our WhatsApp group, because we will put the announcement for the room there. So.
Oh yeah, I am on the group. Yeah.
Brilliant. Well, thank you very much.
Thank you.
Best of luck, or I'm assuming in Italian would be best to say in bocca al lupo.
That's perfect. Yes, that's exactly how you say. Well done.
Have a good day, and thanks again, Simona. Righto, we've got 16 minutes to go. This is Startup Fundraising Q&A. It's our 138th session. We're here with Rumbi and Guy trying to help founders with whatever questions you have in terms of navigating that fundraising journey of yours. There are no wrong questions, and there's no need to be shy. It's a learning curve for us all. For those of you that are tuning in via the live streams, please remember we're unable to monitor your questions there. So you'll need to join us here on Microsoft Teams. We're only going to be here, as I said, now. Actually, it's 15 minutes now. Best way to do that is go to our site, startup2scaleup.club. Look for today's session, Startup Fundraising Q&A 138. Click join, quick registration. That gets you an email with a link, and then you jump on that link and join the audio-only session here on Microsoft Teams. When you're here, like Simona just did, then drop your question in the chat, and then we'll give you the mic to ask questions. Now, we'll go on to another question that was sent in. Right, a telehealth platform for chronic illness support. They're based in London at seed stage. And they go on to explain our current situation is that recently we've had a seed funding round fall through, leaving limited runway to continue operations. So really my question is, our telehealth platform for chronic illness support had its seed round fall through, and we need a contingency plan to extend our runway. Should we consider restructuring our service offerings to focus on short-term revenue generation, such as providing consulting to healthcare providers, or would this pivot risk diluting our core product's impact? Additionally, would exploring non-dilutive government grants such as Innovate UK be viable to cover immediate operational costs whilst we seek new investors? I'll pass you on to my experts now, but again, it would have been nice if you'd been here so we could ask, how much runway you've got and so on. Rule of thumb used to be about 6 months. I'm now seeing even as long as 18 months to raise. So let's go to our panelists first. This time, let's start with Guy and then Rumbu, please. What would you do here, Guy?
I think if we're saying we've got limited runway to continue operations, you essentially need to do everything you can to continue those operations. So all of the suggestions that were in that message were good suggestions. I know there's sort of concern around pivot risk dilutes the core product's impact, but equally, if you're able to get any cash through the door to keep you going in this moment, that's better to take a few more months to kind of get the core product up and running whilst you have to generate revenue on the side than just having everything fall over. So, I think the first port of call will be to the existing shareholders. I don't have any background on this, so I don't know if you've got institutional angel or just founder shareholders, but can anyone put in short-term funding to keep you going whilst...
Being seed, I would, again, I'm assuming here, and we can only do that, but being seed and based on how she'd asked the question, I doubt they would have institutional, so it's probably some angel or the 3 Fs.
Yeah, well, so then it's, they're the first port of call to see if anyone can put in a short-term loan, whether that's via convertible, discounted equity, or a straightforward loan. But I don't know how much there'll be to kind of secure within the business against a loan like that. And then I think, trying to find grants is a great idea, but with Innovate UK and those kind of places, they're quite lengthy application processes, and they will have to be project specific. So it's definitely worth exploring. It may not work though. But I think, essentially, as you've said, try everything you can just to keep that runway going whilst you find alternative investors. And I think reaching out to angel groups that look at businesses like yours would be a definite, given your seed stage, would be a good starting place as well.
Thanks, Guy. Rumbi?
Yeah, very similar kinds of thoughts and feelings. It would have been very useful to understand the situation, especially, I think, actually understanding why. As in, did investors just pull out at the last minute after terms, that kind of thing? Because I think it helps to understand what kind of support you could have to kind of work through that. One of the things that I jotted down, but I think was just spoken about, is the pre-seed investors. Is there any capacity from them to help you in this moment, to really advocate for you and potentially help speak to investors on your behalf? It's a really tough market right now, understandably, but that's always, for me, I always encourage founders who've already received some investment to actually really lean on their current investors, because they have a real financial incentive for you not to struggle, and for you to grow. That's one thing. I think that for me, the other point is very much in line with what Guy said. Between the choices that you have, yeah, definitely, restructuring, doing what you can to bring in short-term revenue is absolutely valuable. If it helps you, bring money through the door, that helps you to continue to build your company as you do the fundraising, or until the market kind of shifts. I think that's a positive thing. The one thing with that is if you are able to do that in such a way that you can actually build insights, because I think the one thing with that, the caveat with that I'd sort of counsel you to think about, is sometimes investors will turn around and say, we invest in technology, we invest in platforms, and it sounds like you have that right now. And then your worry is, which I understand, is if you start focusing too much on this very non-scalable kind of work, will that impact how investors look at you as a technology tool, as a platform? I think the one way you could get around that is actually to, as much as you can, I think there'll be just, the necessity just to go out there and just make money, bring money through the door. But if you can, find a way to have that consultancy, building deep insights, building things that help to improve your platform, in the long term, then you can tell that story to investors. I think the other part of the story that you can also tell to investors is that if you manage to do that, you do it successfully, is you're the kind of founders that went out there and did what they had to do to, you know, keep their company going and to grow their company. And I think that's something that's not to be undervalued. So I think if your concern is too much around like, oh, is this going to impact how investors look at that? I think there's a way to get around that. But in the short term, yeah, just doing what you can to get money through the door. I would also think about the different kinds of investors you can start to speak to. I think more like angel investors. I know that it's notoriously difficult to access angel investors, especially if you don't have like a pre-existing proximity or network. But I think angel investors and family offices could be really interesting for the kind of thing that you're building. I would also potentially look at foundations. I think it's kind of similar to the point the guy made around timelines, how quickly they could invest. So angels and family offices can make decisions very quickly. But I feel like I've come across a few foundations actually that, you know, have a really, really strong interest right now on health. So just finding different kinds of people. The other thing as well is actually just like going out to a network. Like obviously without knowing too much about yourselves as founders, just going out to your network and really asking for help, both in terms of accessing any kind of, you know, non-dilutive capital that you can take in right now to bridge, you know, this kind of gap between now and when you have some more funding secured, and also just to actually get some business through the door.
Well, thank you very much to both of you. Few things to quickly bring here. Since you're based in London, I would go to the City of London. They've got, I believe it's called the Small Business Research Team or something like that. Go to their offices and you can use Borhurst, which is probably the most thorough or one of the most thorough databases and directories of investments in the UK. Find each and every person that has recently exited, let's say in the last 3 years, that has exited businesses in similar fields. Maybe also find other angels that have recently invested in similar businesses. And also try and do some research with people you know, because most people have been paid various commissions and bonuses and so on in March. So they might have not spent their money yet, and you can get some SEIS investment there. And I would also look at accelerators that may expedite that journey in terms of growth and building for you. But on the other hand, if I had $1 million for every time I took a bar job or some other work on the side to keep my startup going, I think I'd be quite rich right now. So do whatever it takes to keep the lights on and don't worry about anything else. Right here, we've got 6 minutes to go. I think perhaps one more question, if we can quickly answer that, if that's okay, team. So this is, okay, kind of similar. For some reason, health seems to be the theme today. So this is from a health data analytics for clinics based just outside London, preparing to go for Series A. And they say our health data analytics platform for clinics is going to raise Series A, but investors are questioning our exit strategy since the market is dominated by acquisitions. What potential exit pathways can we explore to appeal to investors seeking alternative liquidity options? Should we consider secondary markets, or would licensing agreements with health organizations offer feasible exit alternatives? Quite an interesting one. Ruby, would you like to go first on this and then Guy?
Yeah, this is definitely an interesting question. And I think the big question on my side would actually be when they talk about investors, this is a Series A startup, or startup that's about to raise Series A, right? Because it's to do with like, is this institutional investors, or is this more sort of early angel investors?
If they're going for Series A, I think it's all in the air, because, you know, traditionally you would go to institutionals, but I've seen angels quite a bit lately, get involved in Series A as well. So to be honest, it beats me. They haven't explained. And again, this is what I mean by we need people to be here live. I get it. You may have a billion reasons why you can't or don't want to do this live and kind of put yourself out there, but can only help if we've got all the information. Anyway, let's try and work with the tools we've got.
Yeah, I think this is it's easier, right, if it's angel type investors, just because there's an expectation that actually they'll get bought out by later stage investors, you know, in the typical sort of cap table clearing up. I think, yeah, if your institutional investors are concerned about what their exit pathways look like, I mean, I think one thing the person spoke about M&A activity being the big driver of exits, you know, in the ecosystem. And I think what you can do is actually kind of like start to reverse engineer that. I've seen companies do that actually from Series A onwards with varying degrees of success, which means that actually starting to strategically build relationships with either the growth stage investors that do tend to engineer these kinds of exits, or with the people that would be your strategics later on. That could be, you know, creating partnerships with them right now. That could be selling into them right now. That could be bringing them on as investors right now, which can go some way to kind of giving investors the confidence, right, that this is something that the market thinks is interesting and that the market would eventually want to buy. I think without knowing some of the other specifics, right, it's like we can't then say, oh, you know, you're the kind of company that's super well positioned for an IPO. I mean, this also just isn't the greatest market for that anyway, and so I think that probably wouldn't assuage an investor's concerns and fears. But yeah, I'm struggling with this one just because I think it's very theoretical. I think that the responses I would give to that without knowing the specifics of the scenario.
I hear you. Thank you, Ruby. Guy, what would you do here?
I'm going to be quick because I've got to jump off for a call at 1, but I was a bit confused, I'll be honest, by the market being dominated by acquisitions as an issue. I would have thought that would mean that there are acquisitive companies, larger companies who are looking for bolt-on M&A opportunities for disruptors in the space. But anyway, parking that, I think that, you know, ultimately secondary markets is tough. If you're looking at secondary sales within private markets, that'll often be at a discount and it's very illiquid. I don't really consider IPOs to be an exit because you typically get locked up, and you know, unless you're at a very, very large scale, you're just not going to have the liquidity even on a public market or a public exchange that you think you're going to have. And investors, you kind of get locked in as a founder anyway, because the moment you start selling on public markets, the market hates it. So those are all those points. I think clearly what you want to do is say, how are you disrupting the space and who are you disrupting? Who are you going to be challenging? And if there are acquirers in that market, therefore are those acquirers going to be possible exit options in the future? And licensing agreements can also lead to acquisition opportunities. So you should be pursuing those anyway as revenue generating opportunities, but with a close mind on, if we have a good license agreement with someone, could that lead to a potential acquisition further down the line? So find those larger competitors who you think you'll be disrupting, who may well look at you as you go from sort of an annoying small business to starting to eat their own lunch, whether they might be looking to acquire you to kind of protect themselves, really. And then thank you, Anton. I'm going to jump off. It's enjoyed today.
Thank you very much, Guy. Well, it's 1 o'clock, so we're going to wrap it up. Rumi, any parting words for us before we let you go?
I mean, thank you to everybody who came and shared some of the things that they're working through and thinking through. I think kind of going back to the beginning, when we spoke about the do's and don'ts, I think, there's something that Guy said around don't get disheartened, but I think it's a really brave thing to start a company. And so I think just kudos to yourselves and just try to, it's a really difficult time, right, in terms of fundraising and all this stuff, but just, really, really kudos to all of you and try to remain quite positive minded. I think some of the questions today just revealed the importance of being really creative. I think sometimes when there's like lots of advice online about like, this is how you build a company or this is how you do X, Y, Z. But I think it was actually in the response to Simona, like sometimes you do just have to be really scrappy, or even, you know, the telehealth founder where they're thinking through, you know, how to manage, you know, keeping the company alive. Like I think sometimes, or not even sometimes, I think at the end of the day, when everything else is sort of stripped away, being an entrepreneur is about making money and doing that, you know, in these incredibly and insanely creative ways. And so I think when we have markets like right now, it is a great opportunity to really dig deep into that. And I think everybody will have different, you know, backgrounds and stuff, but that also means you have different things that you can lean on to really just get insanely creative around different kinds of things you do. I've worked with companies from like, you know, people selling jewelry on a bead stall in Kenya's 5th largest city to, you know, startups that are sending satellites into space. And the fundamental thing is, it remains the same, right? Like you just have to be scrappy and you just have to get out there and do it. So I think all I'm trying to say is you're already doing it. So yeah, just keep pushing.
Well, thank you very much, Rumbi. Huge thanks to everyone that tuned in today, especially to those that were here live on Microsoft Teams and people like Simona that actually asked the question. Obviously, grateful to both Rumbi and Guy for their time and valuable input today. Just a quick reminder, well, 2 quick reminders. Number one, next time you join us, try not to do it via the live streams. But join us here live on Microsoft Teams instead. You can RSVP to future sessions via our website, startup2scaleup.club, or even better, when you go to our site, join our WhatsApp community. We've got groups of founders, investors, operators, and that kind of stuff. There's a WhatsApp icon at the top and bottom of our site. On the other hand, in terms of kind of reminders, we run 6 regular events helping founders for free with whatever questions and challenges or ideas that you may have. Mondays it's talent, Tuesdays product and tech, Wednesdays growth, Thursdays fundraising, second Friday of the month it's UK startup law, and third Friday of the month it's UK startup finances. They're all from 12 to 1 p.m. UK time, and you can RSVP to any of them via our website. As far as my parting words are concerned, just remember the startup journey can be both exciting as well as challenging. So try to have some fun in the meantime and be kind to yourself and everyone else for that matter too. Otherwise, see you next week for Startup Talent Q&A. Have a great afternoon, have a great coming weekend, and God bless you all. Bye-bye for now.